Now to the story in Cyprus. Just last hour or so, an hour and 5 minutes ago, in fact, banks in the country reopened 2 weeks after politicians ordered them shut. The island's economy remains in tatters, though, and people are desperate to get their money out. This was the scene in Nicosia overnight, the capital of Cyprus. Thousands of Cypriots angry over the island's bailout deal with the Eurozone and the austerity measures that will likely kill thousands of jobs. Cash flow has been tight since banks closed, and strict capital restrictions continue. Still, account holders are expected to withdraw nearly €6.5 billion today. The central bank is flying in containers full of cash to deal with demand. Let's give you some live pictures now. That was the scene overnight. This is what things look like this morning. You can see lineups, crowds, people gathered outside that bank and using the ATM, even though they can only take out €300 at a time. But this is the scene, not a run at this point, at this particular location anyway, a lineup, and it looks to be in pretty orderly fashion. Freelance reporter Maria Caglidou is on the story for us. She's outside a bank as well, in the capital of Nicosia. What are you seeing there this morning, Maria?
I'm actually outside 3 banks. I can look at 3 banks, and there's queues outside 2 of them. Now, one of them is a very troubled Laiki bank, which will be wound down. There is a queue outside a cooperative bank, and no queue outside the Bank of Cyprus. I think they've let everybody in. Laiki is letting people in 4x4. Now, most of these people queuing here are people that want to get to their savings. Access to cash has been severely limited. They can only take out up to €300. Many have been stashing up and emptying their checking accounts in the last few days, and they now want to have a go at their savings. So they're queuing outside. Some of them don't have cash cards for their savings accounts. They're mainly older people, I have to say, as younger people would use their e-banking facilities. And they're all concerned. You know, the situation here in Cyprus is very serious. What has happened is unprecedented. This kind of capital controls in a Western country, in a country that is part of the Eurozone. They're angry with their politicians. They're angry because it had to get to that. They're angry with the current government for agreeing to such a deal. They're angry with the previous government for letting things slide to such an extent. And they're very unhappy with the European Union, and especially the Germans. When they joined the European Union in the early noughties, they thought they were joining some sort of union of equals, and they found very much to their, to their chagrin that this wasn't the case. And when they joined the euro just 6 years ago, they weren't certainly expecting that the Eurozone would demand that their whole economy would be completely restructured. So they're very unhappy. They are facing very strict controls on what they can do with their very own money. Some of them stand to lose up to 40% of their cash deposits, of their cash in the bank, if it's over the insured limit of €100,000. That's roughly $130,000. They can't take out more than €1,000 in cash out of the country, and they can't any longer cash any checks or to cash checks for business purposes. This has to be approved by various committees of all sorts. They can't send money to their children studying abroad. They can only send up to €5,000 for 3 months. So they're certainly very unhappy. They're lining outside of the banks. And we have to see what's going to happen here in Cyprus in the next few days.
We certainly will, and we'll watch it with you, Maria. Thank you. Outside 3 banks. Again, let's give you one quick live picture of the bank where the camera we are using is positioned. There had been concern about a run on the bank, chaos, disorder, panic, and there was a very strong security presence to avert that. But at this particular location, you see Cypriots lining up in an orderly way, waiting to withdraw their €300.